insurance as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title, again, is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. It is Mike, Mark, and Tucker with you on a Tuesday morning. Mark, how much longer do we have you before you're moving on to your appointed role at Berkshire Hathaway to replace the Buffett, the Oracle of Rhode Island? Gonna be. We're pretty much through earnings season.
I should be insulted, but that's funny, I guess.
No, it's not an insult. You're the only person at our entire firm who I would even consider to be a candidate for a role at Berkshire Hathaway. It's not
really.
An
I think
insult.
of all the co-hosts of this show, you, Paul Lane, Chuck Zada, I'm the least qualified to select individual companies.
I disagree. In either case, we are most of the way through earnings here. We do have a few other significant companies to report. Notably, NVIDIA will report in a few weeks. That's not until, I believe, May 20th. It could be a little bit later. Advanced Micro Devices will go after the bell today. A few utility companies, Duke Energy reporting today. Novo Nordisk will go tomorrow morning. Uber and Disney as well. But like I mentioned, we're pretty much through earnings season. And the takeaway, I don't know if you have any earnings takeaways. This wasn't really on our calendar, but for today, my main takeaway from the last few weeks of earnings has been, the big tech companies have largely skirted this trade war without any impact to their bottom line so far. And many of them not really warning of any impact to their bottom line either. They have other concerns. They have antitrust concerns. They have recession concerns. But by and large, whether it's Amazon, Google, Meta, Microsoft, they by and large reported pretty solid earnings and were rewarded for it. When you look at the other 490 companies in the S&P 500 or so, they are reporting some pretty significant concerns about tariffs and recession, and they're doing so not by saying, hey, we think we're going to lose a bunch of money. They're basically coming out and saying, we have no idea whether or not we'll be able to make any money in 2025. We don't know how much we will earn. We don't know where those forecasts will be, and we'll basically let you know once we have some idea of what that's going to look like. So that's my takeaway from first quarter earnings season. I don't know if you had any other meaningful takeaways. Not all tech companies, not all of the Magnificent Seven got away scot-free. Obviously, Tesla is in that group, and they have seen a massive hit to their sales and earnings, not so much as a result of tariffs so per se, but as backlash against President Trump as well as Elon Musk. Any other big takeaways, though, that you had so far through earnings? The main one to me was just the uncertainty.
I have never experienced, and I dare say anybody doing this has ever experienced, a pivot on policy as dramatic as the one we're living through right now. We've just come off 2 consecutive quarters of outstanding earnings from the S&P 500, 13 or so percent, might be closer to 10 at this point, somewhere in that ballpark, year over year in the most recent quarter. Ancient history, doesn't matter. The regime has changed. And as you said, what matters for markets is what's going to happen, not what has happened. Sure. Don't let anybody tell you markets are moving in response to what happened 6 months ago. They're always forward-looking, ideally heavily future oriented deep into the future, and people understandably, they don't know what their inputs are going to cost, what the rules of the game will be in 2 weeks, 2 months, 2 years even. How can you plan?
Yep, and look, this is the hallmark of the Trump administration, right? Their first 100 days, all the speeches that have been given over the last week or so have been all about the pace of change in the first 100 days of this administration. They've also acknowledged that that pace is likely to slow down over the next 100 days because there isn't quite as much they can do via executive action going forward compared to what they're able to do via legislative action. And so it is likely to slow. But what doesn't seem likely to slow is the action on tariffs. That seems to be an area that is going to continue to be negotiated, and in the absence of some sort of big Supreme Court case removing power from the executive branch, which I deem unlikely, we are likely to see continued change, continued negotiation, and continued uncertainty on behalf of American companies and CEOs on what comes next. And so, as we've talked a lot about, and you've kind of said it tongue-in-cheek a few times, wake me up in a few years. Let's see what happens. But I think realistically, wake me up June, July timeframe and give me an idea of what's been happening at that point in time. What do store shelves look like? What does employment look like? It's not going to happen overnight, and you've got investors here that are trying to kind of sift through it all, and it's true that sentiment is quite negative for the economy, but at the same time, you have some of the largest companies in the world who are basically saying, at this point, we're not really affected by these tariffs things, and we'll see what happens next.
I think the only thing you can say with certainty is that our reputation internationally for stability and consistency in dealing on trade has been tarnished. I don't know if it's been irreparably damaged or not, but to hear foreign leaders talk and people in the know about the sentiment among foreign leaders and populations talk about stuff like this, it sounds like our reputation's taken a pretty big hit. That likely means less foreign investment going forward. You're already seeing that play out in the dollar weakening relative to other currencies, which, assuming no change in savings rate here, either on the part of people or the government, and that looks unlikely. Deficits seem to be growing, not shrinking, for example. It probably means slower long-term growth for the United States and lower equity returns, all else equal, because those two things are tied together. That's about all you can say with certainty right now, but we could also turn on a dime here, get our act together, and resolve this in an orderly way.
Yeah, I mean, that's what I keep going back to is, raise your hand if you would be terribly surprised if 3 months from now tariffs on China and every other country looked dramatically different than they do today. I wouldn't be shocked by that. Even with China. I don't think they're going to zero, but I would not be shocked if tariffs and relations between the U.S. and China looked dramatically different than they do today on May 6th of 2025. And so, that is exactly why companies are not importing a whole bunch of stuff. That is exactly why companies are delaying decisions, because I think they too acknowledge, I don't know what the game is going to look like a few months from now, and so in the face of that, delay. Speaking of delay, we have a Fed meeting tomorrow. The press conference coming at 2:30 p.m. Announcement at 2 p.m. on interest rates. At the moment, very likely that rates will be sticking exactly where they are, and a lack of a decision coming from I suppose doing nothing is still a decision, but a Federal Reserve that is going to be faced with a lot of challenging decisions to be made here in the face of uncertainty around policy. We'll get into the Fed a little bit, but that is the compelling story of this week.
You can't wind me up like that and then punt
on it, yeah. And now we're going to take a quick break.
Waving a bone in front of a dog and then later, buddy.
Precisely. We do have markets off to a bad start so far this morning after, 10 days of gains, 9 or 10 days of gains over the last week and a half. So pretty good rally coming into this week, but at the moment, Dow, S&P and NASDAQ off a little bit more than 1/3 to 1%, depending on the index you are looking at. Let's take a quick break. When we come back, I do want to dive into that Fed meeting because I don't want to just leave you 2 minutes to gnaw on that bone, Mark. So quick break. Fed Talk is next here on the Financial Exchange.
The global trade war has roiled markets, and a recession could be next. Keep it here for breaking business news and complete market updates on the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by Margaritaville Resort Cape Cod in Hyannis. Looking for a great vacation spot? Look no further than Margaritaville Resort Cape Cod. Located just off Route 6, Margaritaville Resort Cape Cod is perfect for a weekend getaway or a fun-filled family vacation. You'll enjoy first-class accommodations and dining, our incredible Fins Up water park, and of course the gorgeous pageantry of the Cape. Visit Margaritaville Resorts CapeCod.com for reservations and more information.
We have a Federal Reserve meeting going on today. The press conference will happen tomorrow alongside the rate announcement. We've got this on the backdrop of, sentiment polls telling us that the economy sucks. Corporate CEOs telling us that they don't know what to do. And yet it's widely anticipated that the Federal Reserve is not going to cut interest rates at this next meeting. So what gives, man? You could make the president pretty happy by cutting interest rates at this point, and yet it seems as though Jerome Powell is going to do nothing of the sort. How do you put yourself in these shoes and evaluate what's going on right now if you are Jay Powell or a board member?
The Fed's models use what we would call hard data, what you and Chuck and Paul typically call hard data, stuff that comes from the unemployment report, from the inflation report, from aspects that make up the GDP report, and a lot of private sector stuff. They talk to industry people, the Fed presidents do, the Fed regional presidents talk to people in their regions, talk to business people about conditions that I imagine, now I've never obviously worked at the Fed. Well, I shouldn't say obviously. I've never worked at the Fed, but it's pretty transparent. We kind of know how it works. So they're about in the same position that we are, where there's a lot of apprehension. Mm-hmm. There's a lot of concern about a stagflationary shock from the tariffs. And by that, I mean tariffs will probably slow growth and increase prices at the same time, thus the stagflation in that hybrid term. But there's nothing. There's a disturbingly small amount, disturbingly in the sense that you'd like more clarity, but you don't have it, small amount of actual data with which to come to the conclusion that anything the Fed could do right now would make a difference. The Fed's main policy tool is the short-term interest rate, known as the federal funds rate. They increase the money supply. That pushes down the federal funds rate. They effectively control it. It takes several quarters, though, for that to work. And it also works on demand. The Fed stimulates demand by lowering the federal funds rate by printing more money. You could think of it that way. That's a pretty that's a simplistic but a reasonably accurate description of how the Fed works. Why would increasing demand solve this problem? If anything, it might actually exacerbate the inflationary impact of tariffs. So it's not clear that the Fed, even if it wanted to, now they will cut rates at the first sign of serious economic weakness, don't get me wrong.
And what do we define as serious economic weakness? I mean, we just got a jobs report last Friday that indicated nothing of the sort, right? We had unemployment rate still at 4.2%. What was it, 190,000 jobs created?
77, I think, but it could easily be revised up or down.
So, in the range above estimates for job creation. So what are we looking for? What is the Fed looking for when it comes to hard data that would indicate a turn down in economic growth? Because on the other side, we had a strong jobs report, and I think the same week or the week prior, we had a 2.4% print on inflation, according to the PCE price index, year-over-year inflation at least.
Mike, they all come to each of the regional presidents and those who serve on the others who serve on the FOMC. Who are appointed by the U.S. president, they all come to this with different backgrounds. Some are business people, many are trained economists. The trained economists will lean on the model that they use, their workhorse model of the economy. They plug in these numbers, and this model will tell you with certain amount of confidence how the economy is likely to unfold over the next few months. So people with macroeconomic, so to speak, backgrounds will, I would think, rely a little bit more on that than others who rely more on their gut. And I would include Powell in this, as he's not an economist.
Yep.
So, Mike, I think it depends on their background and their life experience, which informs their judgment. As I said, I don't have any special insight. None of us really know any more than policymakers do about the economy. Data is that current and transparent.
So rates as they stand today are targeting between 4.25% and 4.5%. That's how they run all of this. The upper end of the rates right now are 4.5% on the Fed funds rate. They always target a 0.25 percentage point range with all of this. Practically speaking, what that means is your home equity lines of credit are in the 7.5% to 8.5% range. Credit card rates have come down a little bit, but not substantially. But your mortgages and things like this are not directly tied to what the Federal Reserve is doing. That's much more tied to the long-term rate, which we've talked about quite a bit. What about that soft data, Mark? Because I know that it doesn't necessarily go into their models, but when we are thinking about expectations around inflation, because this is soft data, right? When you poll Americans and ask them, what do you think prices will look like a year from now? That is not speaking to anything in particular, but when you think about those expectations, it can become a self-fulfilling prophecy.
No, you're right, and I misspoke a little bit. Expectations do make it into their big, sophisticated model. The state-of-the-art does recognize and has since the 1970s that people are forward-looking, and that expected inflation heavily influences the inflation process. So
and plain and simple here, explanation of this expectations. I'm remodeling a backyard deck that we're doing right now. The stone that we are installing was coming from China. I expected the price to go up. I bought it a month ago, and it's all sitting in my backyard, not ready to be installed yet because I wanted to avoid that price increase. If you've talked to anybody about buying a car over the last few months because they're worried about price increases, that's the same thing in terms of expectations of prices going up, kind of becoming a self-fulfilling prophecy. That does go into the models, and I guess the question is policy significantly restrictive right now given those expectations for inflation?
When expected inflation goes up, the real interest rate, the after inflation interest rate that the Fed targets comes down, and they don't control expected inflation. So in the past several weeks, we've seen many different, though not all agree on this, not all measures of expected inflation agree on this, but many different expected inflation measures, both survey-based, those that ask people what they think, and market-based, those that are based on tradable financial instruments, suggest that expected inflation has gone up. Some suggest it's gone up by a lot. This makes the Fed's job harder, because when expected inflation goes up, real interest rates, that is after expected inflation, interest rates come down. That means policy which was previously restrictive has become less so. And again, the Fed doesn't control this.
Mark Carney, the new Canadian Prime Minister, is scheduled to visit with President Trump today at the White House. That's their first meeting since Carney became Canada's leader, and to continue conversations about trade between the two countries. We will see how this meeting goes. I am relatively optimistic, and I just mean relatively compared to the EU or compared to China on the direction of these negotiations. We've heard from Ford, General Motors recently just in terms of the tariff hit that they will be facing due to the trade relations with Canada and Mexico right now. But I think this will be telling. And one trend that I've seen starting to play out here when it comes to these trade negotiations is the president and his advisors seem to negotiate a little bit more when markets are under pressure, right? We saw that with the retaliatory tariffs getting waived during the bond market sell-off. Equity markets have rallied pretty significantly over the last couple of weeks. I think the president is likely going into this negotiation feeling as though he's got the upper hand, which admittedly, right, the Canadian economy in the face of these tariffs will be far worse off than the United States economy. But this to me will be an indicator, hey, is there room to get these types of deals done with our closest allies? Because we are certainly closer with Canada, both in terms of trade and just politics than we are, say, with the European Union, and those negotiations are heating up as well. So what happens here with autos? What happens here with the new tariff on films produced overseas that we're going to be talking about? This, again, it's not as though trade between the United States and China is the most significant and only thing that matters, but I do think it could be a bit of a bellwether for what we are likely to see over the next 90 days with other countries and those negotiations. So I expect that we'll see some sort of press conference later this afternoon on the subject. Quick break. We've got Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse, when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are extending their losses from yesterday as the Fed kicks off its two-day monetary policy meeting where rates are expected to remain steady when the meeting concludes tomorrow afternoon at 2. Wall Street also continues to monitor ongoing developments on the trade front, where yesterday Treasury Secretary Scott Bessent told CNBC that the U.S. is very close to some trade deals. At the moment, the Dow is down by about 1/3% or 152 points. S&P 500 is down by 0.4% or 21 points, and the NASDAQ down by just over 0.5% lower or 100 points. 10-year Treasury yield is flat today at 4.35%, and crude oil jumping 4% higher today, trading just below $60 a barrel. Despite meeting earnings expectations and boosting its full-year revenue guidance, Palantir down by 13%. Some analysts cited the defense technology and AI companies' lower magnitude of first quarter beat, weaker Europe, and slowing customer growth rates as causes for today's decline. Meanwhile, Ford suspended its annual guidance, where the automaker said it couldn't predict the full impact of President Trump's tariffs. Ford also reported a steep decline in quarterly profit. However, Ford is up by 4% at the moment. Elsewhere, toy maker Mattel said it was moving more of its production out of China and making plans to raise prices on American toys. The company also scrapped its annual financial forecast. Mattel shares are up by 2%. Busy day for DoorDash after it agreed to acquire British food delivery company Deliveroo for about $3.9 billion and also said it would acquire restaurant booking platform 7 Rooms for $1.2 billion. DoorDash retreating by 8%. Clorox posted disappointing quarterly results where the cleaning products maker missed on earnings and revenue forecasts. That stock down by 3%. Hims & Hers up by 9% after the telehealth provider guided for lighter than expected revenue in the previous quarter, but said more collaborations were coming. And after today's closing bell, we'll see earnings from Supermicro Computer, Rivian, and AMD. I'm Tucker Silva, and that's Wall Street Watch.
My brother works for DoorDash.
Cool.
Yeah, thought you'd want to know.
No.
I always tell people that he delivers food, but he actually works in finance.
How long has he been doing that?
Delivering food or working in finance?
DoorDash.
I don't know.
Yeah.
Several years. I think so. Yeah. I'll get him on the show sometime. We can ask him about his personal work experience working for DoorDash.
No, we're good. We're good.
Chinese exporters are skirting Trump tariffs through probably illegal action in the most predictable story that you could have seen coming out here. Look, this is a defining factor of any new tax or prohibition that goes out there. I mean, you think about, I said prohibition, right? You try and ban alcohol sales, and guess what? People are going to skirt that and find ways to find alcohol. You put in a new income tax or estate tax, they're going to find ways to try and avoid it or skirt it. And likewise, you put in a new tax on imports, and Chinese exporters are going to try and find ways around this, creative ways to undervalue the items that are being shipped here. And that seems to be what they are doing, is saying, hey, when this container ship enters the United States, we are going to tell the customs agent that it's worth X number of dollars, but then we'll have kind of a workaround to sell this stuff to you in the United States at a larger dollar value in order to maybe not eliminate the tariff entirely, but dramatically reduce the rate of tariff here. And this is going to be a challenging one for the Trump administration to combat. One, I don't think you're going to have a lot of buy-in from Xi Jinping and the Chinese Communist Party to say, hey, we need you to crack down on these domestic companies who are trying to skirt these tariffs that you hate and disagree with fundamentally. So I don't think you're going to be getting any help from the Chinese. And therefore, the only real way to go about it is punishing the American buyers of these goods who are knowingly participating in a fraud, which you also don't really want to do if you're the Trump administration, would be my guess.
Yeah, I guess that the buyers on this end would have to be complicit, or would at least have to be aware that, for example, their prices have not gone up by as much as the amount of the tariff, so they'd have to be suspicious. As I understand it, the gaming of this is occurring on the seller end of it, on the exporter, right, which in this case is China, end of it. As you said, Mike, totally predictable. Just another example of how tariffs create evasion and gaming type behavior that ultimately doesn't make anybody better off. It's why they are not a first best, maybe even not even a second best tool for achieving whatever the heck the objectives is for these tariffs. I don't know what it is. It changes every day. But whatever, I'm sure there's some objective in mind. Whatever that is, there are probably better ways to achieve it than setting off this type of totally unproductive behavior.
So, for example, Aaron Rubin, who owns the logistics company Ship Hero and a martial arts equipment distributor, said his Chinese suppliers have offered to do DDP, which stands for delivery duties paid, meaning the Chinese exporter will actually pay the tariffs at the port and then sell the items to you. They said, we're going to cover 100% of the tariffs and he would never get a bill, but very clearly understood that he would be participating in a fraud if he did so. But it leaves him in a position where, look, if all of his competitors go and buy this stuff with this stuff in place and avoid the tariffs, then he's suddenly going to be sitting on supplies that are at way higher cost than all of his competitors.
One thing I didn't get, but is how exactly this is fraud. Is it because they're understating the value of the cargo when it comes at the Chinese, in this case, exporter is understating the value, paying a tariff rate on an understated value. So they are committing fraud. The buyer, how are they complicit? They, to the best of their knowledge, duties were paid. That's what the exporter, in this case, the Chinese seller, told them. Is that your understanding of why this is fraud?
It sounds like it's getting a little bit more explicit than that. For instance, a California-based food manufacturer who asked not to be named for the article said that his Chinese supplier offered to change the COGS on invoices to help them evade tariffs. So basically, yes, I think you are correct that they are saying, hey, this product is worth X when it's actually worth X plus 70% in order to evade those tariffs. But I don't think they're being terribly secretive about it with those American buyers of
And again,
those
you'd
products.
have to know, because the price you paid for it was not increased by the amount of the tariff.
Yeah,
That's
I
the
mean,
point. Okay.
You can,
little...
I suppose, turn a blind eye here and claim ignorance that, I thought they just improved their efficiency by 90%. But that's
right.
The question is, hey, do I go and participate? This owner of that California food company basically said, my options to either lay off my team or join the fraud. Tough call.
Or turn a blind eye anyway.
I think in that case where you have explicit communication, probably via email, that hey, we're going to undervalue the product here. Yeah, I would.
You're right.
It'd be a tough spot to be in because absolutely, if you've been buying the same, who knows what it is, but kitchen equipment in order to manufacture this food product from the Chinese for the last 15 years, then you know exactly what it costs. And if it's coming in at the same cost that it was prior and you know that the item is subject to the tariffs, then you kind of know you're participating in a fraud of some sort or another when there's been hints of this type of thing. So the problem, like I said, is you're really not going to have any luck if you're the Trump administration by going after these suppliers, right? What are you going to say? Well, now you're facing a 250% tariff. It makes no difference. The only real way to go after this type of thing successfully would probably be to go after the buyers in the United States whom you can actually prosecute. And those guys are struggling quite a bit to begin with. So I don't know how popular that would be. Let's take a quick break. When we come back, Ford coming out and talking about their tariff effect. We'll cover that next here on the Financial Exchange.
Market volatility is at its highest point since the pandemic. Keep it here for the most comprehensive coverage of the global trade war. This is the Financial Exchange Radio Network. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and you can register right now for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Ford Motors rallying about 4% this morning on news that tariffs are going to cost them $1.5 billion. I guess that must be better than expected. I do know that Ford is one of the least affected companies by tariffs. Tesla, obviously, the least affected, given that most of their manufacturing for vehicles sold in the United States is done here in the United States. But General Motors last week said the tariffs would increase their cost by $4 to $5 billion this year. I'd be most interested to see how much front running is happening here. How much, I've heard 2 or 3 instances, just anecdotally, of people pulling those purchases forward on vehicles. But is it really having an effect on earnings in this quarter coming up? I think will be an interesting question. But for today, at least, stock price moving a little bit higher. Goldman saying that bear market rallies are the norm. This is something we've talked about a little bit here and there. But I wanted to quote a stat here that I saw published, I think it was last week. We come off this big 9-day rally across financial markets, NASDAQ especially, but of the 25 best days ever for the NASDAQ, which included Wednesday of last week, 22 of them took place during the dot-com collapse. So I'm not talking about during the run-up of the dot-com bubble, but 22 of the best days ever for the NASDAQ occurred while the NASDAQ itself was on its way down to, what did it go down, like 80% during the dot-com bubble? 80, yeah. The 08-09 crisis or early days of COVID. So it occurred, 22 of those days occurred during that dot-com bust, 08-09 or early days of COVID. One more during the 87 Black Monday event. So the point that I am attempting to make here, and that Goldman I think makes pretty well, is that it is incredibly common for markets to rally even during recessions and bear markets. And what we experienced during March of 2020, which was, just to remind you, like a 3-week straight down. We had, I think, 3 or 4 days where markets were paused for trading because of how significant the downturns were. That is the exception rather than the rule. Very rarely do markets fall by 30% in a straight line over the course of 2 or 3 weeks. Generally speaking, when markets go down, it does have moments of steep downturns, but it tends to be defined by uncertainty, changes in what people expect are going to happen, and therefore downturns followed by rallies, followed by downturns that ultimately culminate in some bottom that is eventually found. But I think some of that whipsaw effect can be treacherous for investors, especially those that try and trade them. You go take a look at the last 15 years, we haven't had a ton of that in markets, right? Since the 08 financial crisis, there just has not been a lot of that significant drawdown in equities that plays out that way. And I just wonder how investors are navigating it today compared to previous times.
Yeah, you don't know something is a trend until well after the fact.
Right.
And it's normal to, in the midst of economic turbulence, see a little clearing patch in the sky and think, well, this could be it. The storm could be moving on.
Right.
And in reality, you're just in the eye of it. It's always obvious in retrospect, obviously.
Yeah, because it's obvious.
But when you're living, because you know how it ended. I don't really have any deep insight other than to say, volatility.
It's pretty normal.
Oh, totally normal. Yeah.
And it would be fairly normal for the markets to reach new all-time highs. It would also be fairly normal for us to move steadily downward into a recession here and see several more 10% rallies over the next few months. I have to stress that quite a bit, is that just because markets have rallied over the last 9 days and just because trade concerns have dissipated a little bit doesn't necessarily mean this is over. But likewise, everyone calling for the next recession doesn't necessarily mean it's going to happen either.
To me, the key thing is a long-term asset allocator, as we like to call ourselves when we are stewards of other people's money, and those other people tend to be long-term investors. We're asset allocating. We rely on stocks for their long-term return potential. They're tied to their growth. The growth of stock prices is tied to stock earnings, which is in turn tied to economic growth. I think a long-term asset allocator like us in our day jobs at Armstrong Advisory Group should be far more concerned about the drag on growth that could come from an unsteady trade regime and disrupted relations with our long-term trading and military partners. If we're not going to create the conditions that allowed the spectacular growth that we experienced in the latter half of the 20th century to happen, if we're going to turn our back on those conditions, we can probably expect lower growth, more volatile growth, and all else equal, that translates into lower returns from stocks. So as a long-term asset allocator, I'm far more worried about what our institutions are going to look like coming out of this than the day-to-day.
I think the number one question to be asking yourself, if you're an individual listening right now who has an investment portfolio, is what is my strategy with all of this? Do I have a strategy with all of this? Because, look, for better or worse, making money in the stock market, or frankly any market, whether it's crypto, stocks, bonds, has been pretty darn easy for the last 2 years. 2023, 2024, there was not a whole lot that lost you money in equity markets over the last few years. And as you're approaching this regime change, as we've described it, that's the number one question I would have for somebody is, do I have a strategy? Do I know what I'm going to do in the event that this is a prolonged downturn? Do I know what I'm going to do in the event that it all turns around tomorrow because policy shifts? If you don't feel like you have that coherent strategy, if you cannot answer that question of what am I going to do in XYZ event, please give the folks at Armstrong a call. We'll sit down with you. We will review what you're doing today, understand how you need to use the money over the coming years, and develop a strategy that works for you. The number for the Armstrong Advisory Group, 800-393-4001. Again, that free consultation with the Armstrong Advisory Group available by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The European Union is targeting $100 billion worth of U.S. goods should tariff talks fail. Just in terms of state of play on all of this, the EU had come up with a counter list of tariff measures totaling $21 billion euros of U.S. goods. That was in response to the Trump's levy on 25% duty on steel and aluminum from the European Union. They agreed to waive that for 90 days as the United States lowered the tariff rates on other U.S. exports to 10%, but it sounds to me like that item was planning to go into effect based on just the steel and aluminum tariffs. Obviously, depending on how everything else goes, they are now coming up with a list allegedly of $113 billion US dollars of goods that would face ongoing tariffs should talks not transpire the way they are looking for. Quick break here on the financial exchange. Markets remain in negative territory, but have improved slightly. The Dow and S&P now off less than 0.5%. We'll cover that and a whole lot more here next on the financial exchange.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. the Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. We've got a market here in negative territory, but slowly improving. The Dow off currently 140 points, about 1/3%. The S&P similarly down, and the NASDAQ off a little bit worse, about 0.5%, but cutting those losses about in half from earlier trading. It's Mike Armstrong, Marc Fandetti, and Tucker Silva with you here on a Tuesday ahead of a Wednesday Fed meeting, and they are going to face a challenging series of Fed meetings, I think, over the next several months here, because as they have alluded to, they're just uncertain as to whether they need to be focusing more on employment or more on inflation, which, by the way, we're dramatizing this a little bit right now. They are always focused on those two items and financial stability generally, which I guess is a little bit more sensitive today than has been at other times recently. But this is nothing new. The Fed is always concerned about the dual mandate, their job of maintaining full employment and stable prices. The question is, will that be significantly more challenging in 2025 than it has been over the course of Jay Powell's previous tenure?
Yeah, if you look at recent history and episodes where they may have gotten the balance between those two forces, between the forces that drive inflation up, the forces that drive unemployment up, or what is the same thing, employment and growth down. In 2020, for example, the Fed was faced with how to respond to a massive shock to supply. Things stopped coming in, and to demand. Both the Trump and the Biden administrations poured a lot of money into the economy, gave it directly to consumers.
PPP, stimulus checks.
$3 trillion under Trump, and then another at least that much under Biden, and the continued deficits to this day are a form of stimulus. So the Fed's got to decide, is this temporary? Is it going to affect expectations, which are an important part of the inflation process? Should we tighten in response? Should we loosen in response to the supply shock? Go ahead, Mike.
You paved over something that I think is important for us to identify. The deficits that the United States run are a form of stimulus. It's very basic, but can you back up and kind of explain that? Because by its very nature, running a deficit, to your point, is a stimulative measure, right? You are run us through it, I guess. But why do we have deficits?
Well, for different reasons at different times, but the reason they're generally considered to be stimulative or expansionary, conducive to economic expansion, is that they put money into the economy. When the government runs a deficit, it's because it's spending more than it takes in. Government takes in money mostly from income taxes, but also a little bit from tariffs and fees and remittances from the Federal Reserve, which typically but not always earns money in excess of its operating expenses. So when the government spends more than it takes in, I know you all know this, but it's worth remembering that big deficits constitute putting more money than the government otherwise could from receipts into the economy, and that's generally considered to be stimulative.
And so, for example,
economic activity.
In 2024, I don't know many people that were receiving physical stimulus checks. Maybe a few people that didn't receive theirs when they should have, but not a lot of people were receiving actual stimulus checks. But we ran 6-7% deficits. So yeah, while they weren't payments going directly to individuals, there were payments going to semiconductor manufacturers and all sorts of green energy companies, and significantly more than the tax revenue that was being collected.
And the part I left out was that the government borrows by issuing debt. People buy that debt. The government uses the money that people give them when they buy debt, whether it's us buying treasury bills, notes, or bonds, or foreigners recycling the dollars that come from trade into treasury securities. That is then used by consumers to whom the government sends money. Think of people who get Social Security and people who get any other number of people who are employed by the government, for example, any number of things the government may spend money on. That in turn is put into the economy and becomes current consumption. So they're borrowing, the government is, to fund current consumption. And thankfully, foreigners have been willing to lend us the money to finance current consumption.
At pretty nice rates.
That's why since World War II, really, the privilege of being the world's reserve currency, the privilege that comes along with being the world's most trusted creditor, which is why Secretary Bessent this morning said the United States will never default. The U.S. government shouldn't even have to reiterate that. But it is a cornerstone principle of the sound and orderly functioning of the world economic order.
So the Wall Street Journal says the Fed is confronting a lose-lose scenario amid these tariff rollouts. Would you describe it as such? And what are the pitfalls for the Fed here?
The way I would put it is they got a tough choice. When this stagflationary, stag being the slow down part, inflationary being the price increase part, when the stagflationary effects of tariffs hits, the Fed has to decide, do we keep rates where they are so that inflation doesn't persist? And it can persist through expectations or other mechanisms. Or do we accommodate even this shock to mitigate the stag part by lowering interest rates a little bit, in which case inflation could really spiral out of control? The Fed made this mistake during the 1970s, arguably in response to oil and food and other shocks. There was a productivity shock. There were numerous shocks that hit during the 1970s that the Fed didn't, in retrospect, respond adequately, restrictively to.
Right.
So, yeah, there are no good options here. The question is, do you want to let inflation run up a bit and not sacrifice as much growth, not let unemployment go up as much as it otherwise would? Or do you want to stamp out inflation pressures, maybe mindful of what just happened with the COVID inflation episode and how that roiled the political landscape and has imperiled the Fed's independence? The Fed wouldn't be in the position it's in today with respect to its independence being threatened had they not made the choices they did in 2020. Maybe they were the right choices. Maybe I'm not arguing that point. I'm saying there are no good choices in the face of a stagflationary shock.
And how much of this depends on which shows up first? It is not necessarily like if you get stagflation, it's not necessarily the case that all of a sudden come June of 2025, you're going to have unemployment and inflation shoot up both by, a percentage point and a half. It's quite possible that you get the inflation piece before you get the stag piece.
That's a good question.
And I don't know how they react in that.
I agree with you. I'm trying to reference, I wish I could reference some work on this subject that says, well, they hit the stag and inflation, the economic slowdown, and the price level jump, and then the ongoing inflation hit simultaneously. I tend to think that we'll see the inflation first, and then GDP, because it's delayed a quarter, we'll see the effect of the shock of tariffs on growth. Well, we already have seen the effect of the shock of tariffs on behavior. We saw that in negative first quarter GDP growth.
To me, the question is what comes first, the signals on employment or the signals on inflation?
Well, unemployment is more backward looking. So I expect inflation will go. We'll see the inflation part of stagflation first. I agree with you, and then further signs of economic distress.
So again, very challenging. The comparison's being made to like a soccer goaltender, right? Do you dive left and try and or dive right and try and guess what is coming in terms of next for this economy? And in the short term, they're probably not going to move at all. They're going to stand there and wait to see what happens. But eventually, I suspect the Fed is going to be forced to either address inflation or address unemployment. And my guess would be they favor the unemployment side more than they do the inflation side. History would show that out, and I have no guess what happens next in that scenario. But the United States has rarely over the last 50 years been plagued by a prolonged period of inflation. And so I think that my guess would be if you start facing this stagflationary environment, they are going to favor the employment side more, and they are going to start whipping out the transitory word again.
Problem is we don't know how quickly prices will adjust to the slowdown in growth, assuming there is a severe stag part of the stagflation. The Fed is going to hope prices adjust fast. If they don't, that's when you get persistent inflation, which was a problem during the 1970s. The only little prediction I'll make here is that nobody's going to be happy with the Fed. Not you, not me, certainly not the president, and nobody generally will be happy with the Fed in 6 months. It doesn't have any good choices.
What else is new?
In
terms of those expectations, obviously for this next meeting tomorrow, almost guaranteed no move on rates. 97% probability that rates stay exactly where they are, according to the Chicago Mercantile Exchange Fed Watch tool. By the end of this year, however, if we take a look there, again, we are at the target range of between 4.25% and 4.5%. The most likely outcome for Fed funds rate is to be in the 3.5 to 3.75 range, nearly 0.75% lower than where we are right now, and wide dispersion there with some scenarios calling for dramatic cuts. But the thing I take away here, which once again, just playing contrarian here for a moment, nobody's betting on rates going up. And I think that's justified because I don't know that there's enough money sloshing around when we're talking about all this to lead to prolonged inflation. But you get tax cuts, you get a whole bunch of, maybe you get bailouts for farmers or other things in response to these tariffs. I am worried about that risk to the upside on rates that is definitely not being priced into markets right now.
I think that's a great point.
Let's take a quick break. When we come back, a little bit of trivia here on the Financial Exchange.
The global trade war is in full swing. How long will it last is anyone's guess. Keep it here for the most up-to-date information plus breaking news every day, right here on the Financial Exchange Radio Network. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange. And on this day in 2004, Friends aired its final episode to an audience of over 50 million. The 50 million viewers for the finale makes Friends the fifth most watched TV show finale of all time. So, trivia question today is, what is the most watched TV show finale of all time? Once again, what is the most watched TV show finale of all time? Be the 9th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the 9th correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mark, I just got back from Arizona. I was over there over the weekend, visiting family, celebrating somebody's life. And one thing I was surprised about, just given its politics as well as geography, is gas prices in Arizona. So the average nationally for gas is $3.16. In Arizona, it's nearly $3.30 compared to Massachusetts, where the average is sitting below $3 per gallon at the moment. All of this reaction to oil prices really plummeting over the last few months here. We've got the price of a barrel of oil on West Texas crude below $60 right now. It's moving up a little bit today, actually. It's up $2.50 today on just some kind of bottom buying, it seems. But according to Diamondback Energy, shale output has seemingly peaked. And I don't know how much this kind of contradicts the Trump stated goal of drilling everywhere we can. But the fact of the matter is that at these prices, the Permian Basin shale just does not look terribly attractive right now in terms of profitability to get oil out of the ground.
Now, the irony, and we all welcome lower oil prices, though strangely, as you just pointed out, it hasn't really translated into, this is always so perplexing and frankly infuriating.
Yes.
Why aren't prices coming down quicker? There are good reasons why. I always forget them in my fury that gas prices aren't coming down quicker, but there are good reasons, I think, why that we need to.
A year ago, the average for gas in the United States was $3.65, but that's in spite of the fact that oil prices over the course of the last year, a year ago we're sitting at $80 a barrel. Today we're below 60. So, what's that? A quarter of a 25% drop in oil prices, and not nearly as much in terms of gas prices, obviously.
Right. So the irony of cheaper oil is that we will make less of it here because shale, this getting oil out of tight spots, which is what fracking does, right? It pulls oil out of these really hard to get to spots that technology had to advance to the point where it could be extracted from them. The irony is, at these levels, the world oil price, and it is a world price,
we'll buy more Saudi stuff.
We're going to become more dependent on. This is unavoidable. We've never been energy independent in the sense that we always export some oil because of where it's produced and how it's used. It gets complicated, and I think we all get that. But there's absolutely no question we'll be producing. We already are, as evidenced by Diamondback's and others' statements lately.
Tough to read into too much what's going on with energy prices at any given point in time. That seems like a fool's errand. But a few things just kind of come to mind in terms of oil prices. One, you do have demand concerns, right? If you're worried about recession, which clearly the globe is worried about recession right now, across the world.
Yeah, we didn't get into drivers, but that seems to be the key driver.
Yeah, that seems to be a big one. The other piece, though, would be there seems to maybe be a price cap, too, under the Trump administration. I don't mean that they would implement any sort of price cap, but simply that they would be very willing to approve new drilling wells and new offshore drilling. There is not the same restriction to oil production that there was under a Biden administration. And so should you see prices, shoot back up to $90 a barrel, you would assume that U.S. production would turn on so rapidly that it might bring prices back down rather quickly is part of my read on this, too. I don't know how that plays into prices at all. It's very difficult to measure. Most of this seems to be recession concern at the moment.
Yeah, I think that's how you would expect this market to work. But I'll just say again, the big takeaway from me is we're going to be producing a lot less oil at 60 than we were at 80 or 90. We're doing like 12, 13 million barrels a day, according to the Energy Information Administration, EIA. And 60% or so of that, a little more than 60%, is shale oil.
Yeah, it's always a good reminder on this stuff, too. People, when they think about politics and the effect on markets, right? One of the many things that I heard over and over again was, what does well under a Trump presidency? What does poorly? And to be fair, this time around, all those bets are off because every investor that I've heard from out there has been surprised by the regime change when it comes to how this president is affecting markets and directing things. But certainly one of the beneficiaries that a lot of people spoke to was, energy markets, right? If you're an oil producer, you're going to be faced with a far more relaxed regime under a Trump administration than you would have been under a Biden administration or a Harris administration, and yet the energy sector down about 8% this year on that price effect. And by the way, very similar things played out under Bush. You had the loosening of these policies brought energy prices down, and those companies didn't do terribly well, whereas when you had a whole bunch of really restrictive stuff going on that may have led to higher prices on oil, those companies could rake in a huge profit because, those who already owned the wells and were able to drill and get the oil out of the ground stood to do so at a much higher profit margin. So my lesson there is very simply that the relationships that you think are going to play out in one way or another based on how politicians phrase things don't often come true that way. And some of the green energy pushers out there, oversaw some of the best periods of time for big oil because prices went up.
It's hard for politicians to influence markets in the way they'd like to. There are always unintended consequences that you can draw a straight line from a policy or a statement to markets from.
Yep. But, in terms of trying to guess what's going to be affected, can be a fool's errand. Let's take a quick break. When we come back, trivia winner, and then talking about buying American over in Europe. Quick break. That'll be next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today. Or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Trivia question today was, what is the most watched TV show finale of all time? That would be MASH. Over 100 million people tuned in to watch that finale. Winner today of the Financial Exchange Show t-shirt was Greg from Drake at Mass. Congrats to Greg, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
European, bit of a backlash against American-made goods, and New York Times has a piece today on the subject. They mention specifically Harley-Davidson, which is apparently one of the hottest motorcycle brands in Sweden, Jack Daniel's whiskey, Levi jeans, Tesla, and McDonald's. I just figured a kind of a quick recap on those stock prices so far this year might be helpful here. So Harley-Davidson, ticker symbol HOG, stock is off by about a fifth so far this year, down 20%, which I would imagine is fairly similar to what you've seen to automakers here. Let's see, General Motors, for example. General Motors only off about 11% so far this year. McDonald's actually up about 8% so far this year. Tesla, this is going to be the loser in the scenario, off about 27% so far this year. Levi Strauss & Company down 7%, and then the owner of Jack Daniel's whiskey off about 7% as well so far this year. The question is, which of these companies does Europe represent a huge buyer's market for it? And I don't think, as we've talked about before, the U.S. is fairly well insulated from trade war because these companies that do business across the globe, they sell a lot of product into the United States, and we tend to produce and consume a lot of things domestically here. However, any degree of backlash against these companies, should it actually come to fruition, will be felt by shareholders pretty significantly here. Yes, it might be felt harder in Canada, for instance, if we end up in a trade war there, or in China, but I don't think it can be overstated just how big the stock market impact can be, even if the economic shocks in the United States are not as bad as felt elsewhere.
Sure. Even a low single-digit hit to profit over time cumulatively is enormous. This is the point I tried to make in the last hour. I'm much more concerned about the long-term impact on growth, both here and globally, because those two things are interdependent. The amount of misinformation on trade that's being disseminated at the very highest levels. I've never seen such an uninformed economic discussion in my life. And I'm not that old. I'm in my early 50s, so I'm not that young either. And I lived through the NAFTA discussion of the early 1990s. Go ahead, Mike.
I was going to say, I'm interested to hear where you go with this, but I'm not sure I agree. Because here's what I mean by that is, like, I think there's been a lot of misinformation put out there about how all this works and who actually pays for the tariffs. But it seems that the American public gets it.
Yeah, no, they do. I'm sorry. I've never seen such a deliberate or inadvertent representation by, in this case, it's the White House. Trade is a ripoff. Trade is a subsidy. Those two things are the exact opposite of what trade represents. Trade between Massachusetts and Rhode Island, for example, makes everybody in big residents of both states better off. We do things we're relatively better at here in Massachusetts. Rhode Island does things, or Maine, or whatever example you want to use, does things they're relatively better at. We're all... Why are you smirking? Because you think all Maine does is...
No, I'm just trying to guess, like...
Trap lobsters. Is that it, Mike?
No, I was making fun of Rhode Island, not Maine, actually. I was just trying to think of the relative dominance of the Rhode Island industry compared to the Massachusetts industry. I know they have a big toy
lemonade,
industry.
Dell's lemonade.
Lemonade,
Eclipse,
spiked lemonade.
Eclipse coffee syrup.
Yeah.
Right?
Yeah.
Probably various black market cigarette brands.
There you go. Okay.
Sorry.
You're allowed to tease them.
We're fairly self-sufficient. I still identify that way. Sometimes, even though I've been a Mass resident for longer than I was a Rhode Island resident. Anyhow, trade makes, let me just state this as clearly as possible. Trade makes everybody better off. On average, there are always some people who are displaced, and that sounds like a very clinical and overly dispassionate way of describing people who lose their jobs, but you're supposed to compensate them through unemployment insurance and by retraining them. Maybe we didn't do enough of that. I think Massachusetts and Rhode Island, too, for that matter, and probably everybody in our listening audience here in southern New England, are good examples of economies that were able to transition away from manufacturing.
Yeah.
Pawtucket, Rhode Island, Lowell, Massachusetts. This was the industrial capital of America.
The colonies.
Right.
Yeah.
We transitioned away gradually. It was sometimes painful, but we got to a place where we're predominantly services oriented, and we are the fastest growing region, save parts of California, in the country. My point is, trade makes everybody better off. It is not a ripoff. We're not subsidizing anybody. We are consuming more than we produce because foreigners want to, in turn, buy our assets, whether it be treasuries or making investments here in the United States. And the degree to which that's been distorted and probably deliberately represented is, to me, the most appalling example of economic ignorance, willful, that I've seen in my life. Way worse than the NAFTA debate, which was far more responsible.
Creating the right estate plan to help secure your future takes effort. Cushing and Dolan are experts in estate planning. Their new guide is called Detour Ahead: Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for some problems. Don't take chances with the assets you've worked so hard to attain. Cushing and Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy today. That is called Detour Ahead: Estate Planning Blunders to Avoid. Again, the number 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mark, I just had to digest what you were saying there for a moment, and I want to kind of repeat it back to you, but I guess I disagree in a couple minor ways, which would be, one, I don't know. I think that free trade from an economic theory perspective does indeed make everybody better off. Absolutely, there are areas that specialize in things that are better at manufacturing one thing than another, and that trade, benefits everybody. When you have a situation like we do between the United States and China, as I've brought up, I do see a bit of a problem there where, hey, whether it's due to the unfair trade practices, whether it's due to them willing to, allegations of slavery or just massive subsidies for their own industries, I do get more concerned about that situation than I do, say, trade between the United States and Canada and deficits there. I think that's a meaningless problem. My main problem with the strategy that we've been talking about has been less that I think, universally we should be trading with everybody is, the best route of things. My problem is that I don't understand what the strategy is with the tariffs, right? If the strategy were very clearly, hey, let's get everybody that is of the similar political mind on board to standing up and opposing China in a more direct way using tariffs, I could get behind that. If the theory were we want to use tariffs in order to bring in income and dramatically reduce income taxes, I don't think it's a good idea, but I could at least, be willing to see how that plays out. If it were all about bringing manufacturing jobs back to the United States, you know what? We're a big country with a lot of diverse abilities to manufacture a whole bunch of things. I could get on board with that. My problem has been from the beginning that there doesn't seem to be at least a stated goal with all of this. And because of that, it's tremendously difficult to allocate capital, make decisions, make trade deals, and for CEOs to move on and say, okay, yeah, this is what we are going to do next, because you don't know what the strategy is and therefore what the end goal is.
All of those objectives that you mentioned can be achieved in ways that don't involve distorting production here and adopting inefficient methods of production, which is what tariffs lead to. They can all be achieved in ways that don't lead to those inefficiencies and that don't make us relatively poorer over time. You want more manufacturing? Subsidize it. I didn't like it, but the last regime, the Biden regime, subsidized manufacturing. They started building a lot of green energy stuff. I didn't like it, but it was a reasonably effective
Semiconductors too.
Investment went through the roof.
Yep.
Investment, which is an important part of GDP and future growth, went through the roof. Again, I didn't like it, but it was effective.
That would be my point.
For example,
I think it's a stupid idea for us to manufacture 90% of the world's latest generation semiconductors on a tiny island off the coast of China that we debate who owns it. I think that was a bad thing to allow to happen, and I think that policies should.
But that
be
was
used
a
to
relatively
that.
targeted way to remedy that without distorting the entire economy. So I'm trying to make as full-throated as I can a defense of the idea of free trade for the same reason it's worth it for Massachusetts and Rhode Island, or Massachusetts and Maine, or Maine and Rhode Island, whatever, to do something they're relatively good at and export that and import things that they can't produce and I use the word relatively very advisedly. I mean the efficiency with which you can produce one thing compared to another. And this does get a little bit technical, and it is not intuitive. I think you have to learn why free trade is beneficial. But amazingly, Mike, as you pointed out in the last segment,
the public seems to get it.
People in numbers I've never seen support the idea of free trade. All it took was this threat of tariffs and all the knock-on uncertainty.
And by the way, I am open to being corrected on this, right? Maybe
what did you say that you think you could be corrected about? I didn't hear anything that
there is a underlying strategy that I'm just unaware of.
Oh no, there's no. It changes.
It seems to,
totally
and that's what concerns me. That's what concerns me the most.
It's totally incoherent.
But I'm willing to be corrected if it turns out, there was a strategy to all of this all along, and this is where it developed.
Look,
but you have to see that come to fruition at some point.
Mike, it may be that you can fine-tune the world economy to get better outcomes for everybody, like some people in this White House want to do. But if there were people around who were smart enough to do that, they're not in charge right now. These people, frankly, don't even understand, and this is true of many Democrats too, don't even understand how trade works. It's not a ripoff. It's not a subsidy. It's not a game of hostage taking or whatever their warped construct is. These people don't even get the basics. I wouldn't expect them to arrive at a solution.
I will say, except with China. I think I carve out a caveat for the way that China trades with the United States. But nonetheless, let's move on. Quick break. When we come back, bit of Stack Roulette is next.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
More tariff news. Was this announced overnight, or when was the Hollywood tariffs announced?
This was Sunday night into Monday morning, I believe.
So new tariffs of 100% on, quote, imported movies, which I have a lot of questions about how this is going to work. But you go and film a movie overseas, and you are now going to be subject to a 100% tariff. My question is on what? Because how, for instance, do you value the intellectual property of the latest Mission Impossible film? So there's a lot of open questions on how this is going to work, but this is a stated new tariff that is going to apply. I suppose you could go and look at the production costs of that movie and say, okay, they are going to face a 100% tariff if they go and sell tickets to that movie back in the United States. Squid Game is a perfect example here, even though it's not a movie, but I have the numbers on it here. So Netflix made the first season of Squid Game for an estimated $21 million over in Korea, and then obviously brought that show to Netflix. Question would be, okay, how do you face that tariff? Is it on the production cost? Is it on something else? Is it on the fact that that series approximately increased Netflix value by some $900 million, according to figures seen by Bloomberg? Do you make it based on some assessment of the IP value of that show? What if it's a total bomb, right? What if you say, oh yeah, Mission Impossible is valued at $200 million and it only makes 50 in the box office? There's a lot of open questions on how on earth this is going to work.
So would this apply to, we're asking questions I know they don't have the answers to, because this seems like a sort of seat of the pants thing. Maybe It's a great idea. I don't have an opinion. Well, I do. It seems silly.
Yeah, you have an opinion.
Well, I think I do, Mike, because I like free trade. And
Sure.
look, I'm a free market fanatic. I'm very easy to figure out. If it frees up people to do what makes them happy, I'm for it. If it doesn't, then I'm generally against it to the extent that there's no public safety justification. I'm extremely easy to figure out. So if a movie is made in Ontario, which a lot of movies are made in Canadian cities that look like American cities, right?
And just Minecraft, which is a big blockbuster hit, Mark, was filmed
entirely
in Canada.
Right.
So continue.
So so that would be tariffed under this scheme, you think?
Hypothetically. But I just don't have any idea what the value would be assigned to the tariff, because what is the value of intellectual property?
You don't know what the movie's made.
It's not as though, well,
tickets.
I suppose you could say, I mean, maybe if
the cost of the film.
Yeah, maybe if Hollywood goes and buys a British-made film, but that's not typically what happens. Usually a Hollywood studio goes to the UK and makes a film and then distributes it worldwide. So it's pretty unclear as to how all of this would operate. It is true, by the way, and this has always infuriated me, because the states in the United States do the same thing. Like Massachusetts has a big old tax credit for filming in Massachusetts. I'm sure Rhode Island does. Every state has one of these things. And countries do too. Canada offers big subsidies for filming movies in Canada. The United Kingdom does too. If you combine that with, I'm sure other countries like Vietnam have the same thing, and then you add in the cheaper labor costs there to film a movie, I can see why you might be upset as an American camera crew that, well, there goes my job, because this all used to be filmed on a lot in Hollywood, and now it's going over to the United Kingdom or to Vietnam or this place or the other place based on these subsidies that they're providing. But this is a really tricky one. I have no idea how this plays out and what the guidance is going to be to these movie makers.
Or as you said earlier, what's the justification? Is there a national... We're still, by the way, under a national emergency. That's the power this president is exercising to unilaterally make tax policy.
Not the industry that I thought he was going to go out and protect.
No. No
Hollywood.
explanation. Maybe there's a good reason, but we need to understand what it is.
Well, I think the answer seems to me to be
slapdash.
the answer to me seems to be the unfairness of other countries' policies when it comes to movie subsidies. But if you're going to do that, then you do need to take a look at Massachusetts and every other state out there that offers huge tax subsidies to film something in their own area. I know the United States as a country doesn't, but many states offer these.
What are you
going to
do Murder on the Orient Express on? You can do it on the Acela? Right?
Yeah, I like that.
Okay.
Yeah, we'll do it on the
Lots of
Acela
sure.
down to 120.
Murder on the Acela. And nobody noticed because it happened in Jersey. And
Dow, S&P, and NASDAQ all off more than 0.5% as we close out today's show. Tomorrow we've got a Fed meeting at 2 p.m. We'll be discussing that, but NASDAQ leading the way down off 116 points. We'll be back tomorrow. Have a great rest of your day, folks.